Okay, Jeff, can you hear me? You're muted, Jeff.
Yes, I can hear you.
Okay. Okay. Hey, so thanks everyone for joining us today, and hello Atanu, and hello Marcos, and thanks everybody for joining us today. Today's live presentation is brought to you by MetaStock, and today's presenter is our one and only, very own, super awesome Jeff Gibby. Are you blushing yet, Jeff? I can't tell. Okay. Jeff has been with MetaStock for so many years, and he's given countless presentations. And if you have come to our channel ever before, he really doesn't need an introduction. He hosts most of our webinars and himself does many webinars, and he's presented all over the world to all sorts of audiences of all shapes and sizes. And I've witnessed many of these presentations, and he always does a fantastic, great job. Very knowledgeable about trading in general, and of course, expert on MetaStock. Ladies and gentlemen, I give you the one and only. Oh, Jeff, shall I do the?
Yeah, you should definitely do the disclaimer.
Yeah, because I'm on a roll now. But you got to show it. You got to show it. Okay. So before we start, let me go ahead and give this disclaimer. This demonstration is designed to instruct you on using MetaStock and accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategy, or any information provided in connection with the company. Jeff, have I missed anything?
No, that's it. That's what you did. A great job.
Okay, ladies and
I would
gentlemen,
recommend
the one and only. Yes.
about 3,000 times, so. But you did good.
What?
I said almost as good as I have done it, but I have done it for 3,000 times. That's all.
Oh yeah, I don't have it. I don't have it memorized. I don't have it to heart. So, all right, Jeff, take it away. Can't wait.
All right, thanks, man. I appreciate it. Hello, everybody. Hope you're doing well. We have a really good attendance today. Looks like noon Eastern is a good time to do these things. I want to say thank you for coming. It's good to see you today. Just to kind of talk about me a little bit. We just did the math this morning because somebody was asking. In March, I'll have been here for 25 years, if you can believe that. But just a real quick summary of what I'm doing. And I'm going to go ahead and mute Gregory's microphone over there real quick. Okay. I started in inside sales. It was a few decades ago. And one of the things that I have absolutely done over the years, I did inside sales for a number of years. That was a lot of fun. I talked to people about like what they're trading and kind of how they're looking to improve their trading. And it's been great. For the second decade, let's say, I actually did business development. So today we have a Bigelow webinar. I actually called Steve Bigelow one day and we talked about his methodologies. We put together a really cool add-on around like what he does into MetaStock and identifying his patterns. And we're gonna be talking about that tonight. For the last 5 years-ish, I've been in charge of our inside sales team as well as like our international partnerships, and it's been a lot of fun. It's been something that I very, very much enjoy. I love working for MetaStock. I do quite a bit of trading myself. At any given time, I'll have about 20 positions on, but I trade fairly inactively. I'm very quick to take a stop loss, but if something's running, I can hold it for months or sometimes even a year or so. So that's a little bit of a history on me. I love the company. I love kind of the product. I wouldn't trade without it. So there you know where I'm coming from. There is some information here about MetaStock. The high points are, we were wholly owned by Reuters, who became Thomson Reuters, who then became Refinitiv. We purchased ourselves back from Thomson Reuters back when they were Thomson Reuters about, I think, 8 years ago right now. It's been a good separation, but we still have a really good relationship with Refinitiv that allows us to get, market data for 200 global exchanges. We'll be talking mostly about American markets today, but we do cover like London, and we have a lot of customers that are in India and Australia and Asia and Malaysia and all over the place. And our relationship with Reuters allows us to power that with some of the best data on earth, in my totally biased opinion. So that's a little bit about the company. The other thing that I'll say, because I kind of like to keep the front part short and not just I could talk forever about it, and sometimes I do. But one of the things I will actually add to that is for 28 years in a row, MetaStock's been rated the #1 software price in its price category. So we're very, very proud of that. For those of you that have been using MetaStock for 30 plus years, thank you for that. For those of you that vote for us year after year after year in the Stocks and Commodities Reader's Choice Award, we appreciate that as well. So in any case, yeah, we just want again, just meaning back in December or January when they announced the results, but 28 years in a row. So that's pretty awesome. One other thing I will say as we go, if you have questions while we go, please feel free to type them into the question box or in the chat box if you're on YouTube. I will be monitoring both of the chats. And if you have any questions or if there's things that maybe I could clarify while we go, please let me know. Atuni, I don't have anything prepared on RSI. We probably won't talk about RSI today just because I'm not prepared to, but I'll keep that in mind in the future. But if you do have questions about kind of like what we're talking about, please feel free to let us know. So, oh yeah, I was wondering, okay, that's actually a pretty good supposition. I was wondering why Marcus came in and said hell. I think he did mean to say hello. So, hello, Marcus. Thanks for coming today. I was like, should I drill into why he's maybe unhappy today? Probably not. Anyway. Let's go ahead and kind of get started. Today, what we're going to be talking about is the importance of a trading plan. We'll start with MACD and kind of talk about how you can use it to get very, very objective results out of technical analysis. Then we'll talk a lot about how to test trading ideas and that kind of stuff. So here's what we're going to talk about. Again, if you have questions, let me know, but we'll try and kind of keep it a little bit interactive. So let's go ahead and talk first about a trading plan. And the guy on the screen, you can definitely tell is Richard Dennis. He's if you're not familiar with Richard Dennis, there's a really cool story that I'm going to kind of just talk quickly about. If you're interested in more information, you should go to the Wikipedia page and then or wikipedia.com and just type in Richard Dennis. And there's a really good story about how he started with a loan of $1,600 and developed it into a huge trading account and was a very, very famous futures traders in the 70s. Richard Dennis was famous. Actually, they had a nickname for him, and I'm just to show you, I'm looking at the page right now, but the nickname that they had was, they called him the Prince of the Pit. So there you go. But he had a friend who was named Bill Eckhart, who was also another famous trader, and they had a very fundamental disagreement that they actually decided to settle with a bet of a bet. So Richard Dennis believed very firmly that like what they were doing in the pits, and he was a little bit revolutionary in the trading area anyway. Most of the people that were trading the pits were looking to scalp, and they were looking for just a few pennies at a time. Richard is actually somebody that was in there trying to hold positions for way longer than these guys would. But one of the things that he believed is like the stuff that he was doing, he could teach anybody how to do. And it's something that he had a very big disagreement with a gentleman that by the name of Bill Eckhart. And so to settle kind of this bet, they brought in a group of traders. They actually recruited 21 men and 2 women, and they basically put them through training for a month. They basically said, here's when you should buy. If you're familiar with the turtle trading system, it's a breakout system. So you break out when you buy based on a breakout of like the 20-day high, or we won't get into kind of the specifics of the turtle trading system. Aside to talk about the fact that after this 1 month training program, Richard actually gave them between $250,000 and $2 million each and started trading. And then, so after 1 month of simple training on how to use all this system and giving him a trading plan, he's like, here, go for it. You trade. And the result was one of the most one of the most famous trading things in history, trading experience in history. It wasn't successful by any stretch of the imagination. It was like incredibly successful. In fact, after everything was said and done, they actually ended up making about $175 million in net profit out of that. And one of the things, and this is a lot of time to spend on one side, but I think the story is interesting. But one of the things that he said, there's a couple quotes that came out of that but this is one that I think leads pretty well into what we're teaching today. As I always say, you could publish rules in a newspaper and nobody would follow them. The key to trading is trading with consistency and discipline. So what we're going to be talking about today has a lot to do with trading rules and when to buy and when to sell and how to evaluate different trading rules. But one of the things I think is very, very important is having discipline about the trading that you're doing. For me, when I'm trading, I take probably more little losers than I take actual winners, but the winners that I have more than make up for the losers in general, right? And so what I think is important to do is to have a good disciplined approach in trading. In fact, and I'm going to let you guys kind of answer this, but what do you think is the best profession to start with trading? And I'm going to let you go ahead and answer that as we kind of move a little bit on. What is the best profession? And we get a lot of answers for that. What is the best profession for trading? Let's go ahead, and I'll let you kind of answer that. If you have a question, if you have a guess, go ahead and guess in the chat right now. I'm waiting for some guesses. Plumber. No, that's not right, Greg. But thanks for playing. A lot of times we'll get a lot of doctors or nurses, and maybe I'm jumping ahead. But sometimes I wait and make people actually guess. But you'll be interested, maybe you'll be interested to know that the best profession to go to from trading is actually an airline pilot. And I've thought about that for a little bit in terms of why the case that is. Like, why is an airline pilot somebody that actually Greg is also guessing psychologist, which actually we work with a couple of psychologists, Dr. Alexander Elder and Jake Bernstein, are both two traders that I very much respect that actually worked as psychologists beforehand. So, but actually the answer is airline pilot. And I think the reason it's an airline pilot is because they have a plan in place. They know exactly what they're going to do when they take off. They know exactly what steps they're going to take and in what order they're going to take it. And they follow that plan every single time they take off. And then when they go to land, they have the same protocol and they follow the exact, well, not the exact same, but a set of rules to kind of go ahead and land the plane. I think that's why that an airline pilot is actually makes for a really good trader, is because they have that level of discipline. So thank you for all of your guesses, Greg. Let's talk about this guy. So we've had this guy's picture up here. In case you're not familiar, this is Gerald Appel, and we're going to talk a lot about the MACD indicator and kind of how it works and how it's calculated. You might be curious in terms of why I picked the MACD. It actually happens to be one of the most popular videos on our YouTube channel is how to use the MACD. And what I found over the years is a lot of people use the MACD, but they don't really know how it's calculated or how it's supposed to work. So what I'm going to do is everything that we do in MetaStock is talking about a trading plan. So I think the easiest way to talk about technical analysis and trading plans is to show you how indicators work and how they can be used in different methods. So what I'm going to do today is actually talk about MACD that was created by Gerald Appel. I'm going to show you the three different popular ways to actually look at it, and kind of how they make a subjective look at the market. And that's one of the things I love about technical analysis in general is I think things should be objective and not subjective. As you'll see as we get along, as long as I do a fairly decent job of actually explaining to you what the MACD is, how it's calculated, and more importantly, how it's interpreted, we can all come to the same conclusion about what the MACD is saying. In other words, we're not trying to make guesses in terms of what we think is going to happen with, like, the Delta variant of the coronavirus or something like that. We're trying to make decisions based on what the stocks are doing, what we see in the stocks, what the trends are doing. And that's the heart of all of the indicators out there. We're just trying to kind of look and see what things are doing. So we're going to start with the MACD indicator by Gerald Appel. And one of the things I'm going to do immediately is I'm going to get out of PowerPoint. But MACD is, before we do that, we'll talk a little bit about what MACD is. MACD is designed to measure trend, and it's designed to measure momentum. And we'll talk much more about kind of how it does that and how it looks at that. But I'm sure you've heard like the trend is your friend, or befriend the trend, or rising by tides lift all boats and things like that. It's a cliche in the marketplace. What we're using with MACD is we're looking to identify the strength of the trend and the trend itself. So let's go ahead and jump into MetaStock, and we'll kind of walk through exactly how the MACD works and how it's calculated and how you can interpret it, and then how you can use that to kind of test it and see how well it works in the marketplace. So if I wanted to calculate a MACD, the calculation for the MACD histogram is actually very, very simple. What I'm going to do is I'm going to add a couple moving averages to the chart, or to this chart that we're looking at. This is just the DIA ETF, and we're down a little bit this morning, but not too much. And what I'm going to do though is I'm going to actually add a couple of indicators to this chart. Right now we're looking at a line chart. There are a number of different charting options you can use in MetaStock. There's 8 or 9. If I wanted to change it to candlesticks or something along those lines, with anything in MetaStock, I can just double click on it. It'll bring up a properties page. I can go to bars or candlesticks or candle volume, equivolume, any of the options. For the point of today's demo, we'll just leave it on bars. But one of the things I want to say is, especially if you're new to MetaStock, it's easy to go ahead and change things. Usually everything since the beginning, since as long as I can remember, a lot of our mentality around designing the product has been to really follow standard software practices. So click to pick, drag and drop, those types of things are very, if you're comfortable and if you've been working with applications for a while, MetaStock should be very, very easy for you to use. The first thing I'm going to start to do though is I'm actually going to start to play with the indicator quick list. So right here is a list of the 200 or 300 indicators that come shipped into MetaStock. I can just kind of scroll down through here and kind of give you an idea that there's really a lot of different indicators we could apply. The first one I'm going to apply is going to be a moving average. So you see, since I used moving average recently, one of the things that we've added in the last couple of years is the indicators that are used frequently are actually going to be at the top of the list. So it actually remembers, like I think the last 20 indicators and puts those at the top of the list for you. So you can see moving average here. What I'm going to do is I'm just going to drag and drop that onto the chart. I'm going to do 2 different versions of the moving average. I'm going to do a 12-period exponential moving average. So let's go ahead and drag this. And where I drop it will dictate where it goes. So like, for example, if I wanted to drop it right here on the volume and see what our average volume looks like, I can drop it in the volume window. And I do like to see how volume compares to normal. So that's something that's very useful for me. If I want to drop a moving average right on top of the price, I can just drop it here. So I'm going to go ahead and do that. When I drop it, it's going to ask me what parameters I want. And this is going to be a 12-period exponential moving average. So we'll change the calculation method to exponential. I'm going to go ahead and make it a blue. I'm going to make it a little bit thicker in terms of the weighting on it, just so you can see it a little bit better on the chart. Okay. Now that was my 12-period. I'm actually going to add a 26-period moving average as well. Okay. So we'll go ahead and leave this one as red so you can kind of see the difference between them. I'll make it a little thicker as well, but this will be my 26-period exponential moving average. Okay, so now you can kind of see there's a little bit of space between it. And I just check to see if we have questions. Again, if we do have questions as you go, please let me know. Okay, now if I was going to calculate the MACD, I'd actually use these indicators. That's the reason I put them on the chart. But with MACD, let's go ahead and drag and drop that into the chart. And since I want it in its own window, I'm not going to drop it here. I'm actually going to drop it towards the top of the chart. And if you look real closely, you can see there's like a little box under my arrow. That just means when I drop this, it's going to open up a new window for me automatically. So let's go ahead and do that. I'll go ahead and click on OK. And we'll talk a little bit about what the MACD is and what the signal line is. So I'm going to change the MACD into the MACD line itself into a histogram real quick. And I can just do that by double clicking on what I want to change. Again, I'm going to go down here and for a style, I'm going to make it a histogram. I'm going to go ahead and click on apply. And we'll go ahead and click on parameters. I'm going to make the moving average of the MACD a little bit darker so that when we start to talk about it, you can kind of see what I'm talking about here. Okay. If I was going to calculate this histogram or the red line here, the MACD value, all I would do is I'd take the value of the 26-period moving average and subtract it from the 12-period moving average. Okay. Or let me rephrase that. I'd take the 12-period and I subtract it from the 26-period exponential moving average. And the difference between those two indicators is going to be the value of this MACD level. And that's it. When you're looking at the MACD, you're just looking at the difference between those two moving averages. Okay, so the way that it measures trend and momentum, well, trend's a little bit different. We'll talk about that a little bit differently or a little bit later. But the way you use it to measure momentum is if you're going into an uptrend and the price of the Dow, if you look back here, we had a really big run up. This is starting in November of last year. We've had a run up that's kind of maybe getting a little bit less momentum-y than it was certainly back in November. But you'll see as the faster that stock is going up, in this case, the market, Dow Industrials, the bigger your MACD value is going to be, okay? If you're kind of getting into a point where you're stagnant, or maybe the market's still going up, but it wasn't going up as fast as it was maybe back here, you'll notice that your MACD values are lower. So it does a pretty good job of helping you measure momentum based on the difference between those moving averages. If it's rising faster, you're going to have more space between your 12 and your 26 period exponential moving average. And that's it. If we go back a little bit further, you'll notice how deep MACD can go. Here was the Corona crash that we experienced from February to March of 2020. I'm sure you guys all remember that. But notice how deep MACD actually got. Notice how big the separation of those two MACD of those two moving averages are that led to that difference in the MACD. So that's how it kind of looks to measure momentum. You can tell if a stock's trending up. If you have a MACD that's positive, you can also tell how fast or how slow it's moving up based on how big your peaks and how big your troughs are. Okay, so I think that's kind of that, and I think that's pretty clear. The blue line that we have is really what Gerald Appel calls the signal line. Okay, and you can use that as a signal line. The way that that's calculated is it's just a 9-period moving average of the actual MACD. So it's basically another moving average that's just plotted on top of the MACD value. Okay. Now the reason that Gerald calls this a signal line is you can use it as a signal. Probably the most popular way that you can look at the MACD is you can use it as a signal to go long or short. So a very, very easy way to say it, let's just go ahead and grab this vertical line tool right here. You'll notice right here the MACD is trading down below its signal line. And right here, on this day right here, it goes to trading above its signal line, okay? Right here on this day, here it was under, here it's over. This is the day where it went above its signal line. And another way to kind of phrase that out is that was the day the MACD went bullish, okay? Here, if we just look at a few days later, it crosses back down below its signal line right here, okay? And that's where the MACD traded bearish, okay? And it is a signal line. If your expectation is, okay, well, we got a signal line cross, the MACD was bearish and now it's bullish, well, then you expect the price of this security to rise. You could buy based on that. In fact, if I wanted to kind of just make it really clear, one of the things that MetaStock has is we call it the expert advisor. But if I attach to it's this guy in the bolo hat right here. If I go ahead and click on that, I can come down here and there's an expert in here. There's all kinds of experts. There's one that I could apply right here called candlesticks. They'll just show you all of the 31 different candlestick single day patterns. There's one for you on RSI, actually, Atuna, which we won't talk about just because I'm not prepared to. But if I come down here, there's actually one called MACD by MetaStock. And you see there's all kinds of ones in here. There's even a turtle trading one in here. But I'm going to go ahead to find the MACD by MetaStock. We'll attach that to the chart. And when I do that, every time that MACD crosses above its signal line, you'll get a buy signal. Every time it crosses down below its signal line, you'll get a sell signal. So you can see that very, very visually on the chart. Okay. All right. Right here, you have a buy signal and you have a sell signal. Again, the thing that I love about technical analysis most of all is it's objective and not subjective. Okay. Why am I getting a buy signal here on the chart? Well, I'm getting a buy signal because the MACD crossed above its signal line. Is it a good signal on the MACD? Or is it a good signal to take while you're trading the DIA ETF? Maybe. We'll get into that a little bit later. But the point of this is an objective way for you to kind of look at what the trend and the momentum of the stock is. So, number one, The first way of the three ways I'm going to talk about today that you can look at the MACD is you can look at the MACD crossovers. If there's a bullish crossover, you could buy. And if there's a bearish crossover, you could sell. And you're just looking at crossovers at that point. Okay. Number two, and we did talk about how MACD helps you measure momentum as well. The second way that we kind of look at MACD is we can use it as an overbought, oversold indicator. So if something starts going really fast in one direction at a time, you could use it as an overbought, oversold indicator. Okay. In other words, if you start to stretch out quite a bit from your MACD values, you might start to see like some notification that there's probably going to be a reversion to the mean type of an incident, right? In fact, MetaStock will look for that for you. I'm actually looking for a point on the chart where that happens. I'm actually going to make the charts a little bit bigger so you can see the highlights. So let me just kind of make the bars a little fatter. And then that way you can kind of see the highlights a little bit better where you're looking at. And you can kind of see right here during the Corona crash, you started to get these green highlights on the bar. Okay, those are actually where we're telling you that the MACD might be looking oversold. And you see that it happened right here through about right here. This whole area, we were warning you that the MACD might be oversold. It will get into overbought territories as well. When that happens, you'll start to get a red bar on the chart. And I'm not seeing any overbought warnings right now. But one of the things I want to point out with overbought, oversold indicators, and this is put together in our commentary. I'm going to actually open up our commentary window here in a second. That things can stay extended for some time. So we started to get oversold on this reading here, and the way we kind of stayed to kind of, but the market still had quite a bit of ways to crash before it finally reversed. So you can kind of use that to start playing a little bit more defensively. But in the commentary that we have, it kind of helps you understand how everything is working on the chart. It actually gives you a specific warning about that. And I'll come back to that in a second. I do want to open up the commentary window and just show you how it kind of helps you understand what's going on the chart. So let me go ahead and go to View, Expert Commentary. Okay, when I do that, you're going to notice right here at the very, very tail end of my chart, you're going to notice a little bit of an arrow, okay? And when I say that, it's going to look at crossovers, which is what we talked about as the number one way you can look at it. And so currently the MACD is bearish since it's trading below its signal line. The MACD crossed below its signal line 13 periods ago. Since the MACD crossed into moving average, actually the price of the Dow has actually gone up a little bit. Okay, so it's been bearish. It's in a bearish territory. It's actually gone up a little bit while it's been bearish, which does happen. Okay, right now, because we're looking at this very bar all the way over to the side, we're not in an overbought, oversold region. And so they can kind of show you exactly what it would say if we were in that overbought, oversold region. We're going to go back to that. Oh, here's an overbought area. See how we started to get a warning where the bar started to turn red right here before this sell-off? If we kind of take a look right here and just move that triangle back to this day, it says the MACD is an overbought range. Okay, so it's saying, okay, be careful. We're in an overbought range. However, prices may continue to move higher for some time. Wait for some sort of a prices to move lower before considering any short position. And while this started to measure that it was overbought immediately at the right time, and then prices started to move lower, we still want to wait for that confirmation, because if we go back to that Corona crash, we were starting to measure oversold readings right here, and the market still fell. At this point, the Dow was, the Dow ETF, just because I don't want to do the conversion in my head, had a high of 244 that day, and still traded down to a low of 186. So it still had a ways to go. You want to wait for that confirmation. But this is kind of your early warning. Hey, maybe we're getting a little bit stretched. Maybe we need to go start looking at that reversion to the mean. There's one more way I'm going to talk a little bit about using the MACD in your trading. And I'm going to talk about Alexander Elder again, the psychologist we were talking about before. The last method I'm going to talk about is what we call MACD divergence. Okay, and the reason I kind of talk about Alexander Elder is we have tons of really good videos on youtube.com/MetaStock that we do with Alexander Elder. And he does a really, really good job. But the MACD divergence is what he calls one of the most powerful signals in all of technical analysis. Okay. And the way that a MACD divergence would work is, let's just kind of draw it on the chart real quick. So if I was to look at the peak of this MACD, yeah, okay, this is the very highest value. We'll go ahead and use that. Okay. And if I compare it to a subsequent peak. So, and the way he defines peaks is it has to cross down below 0 and then come back above 0 and set a new high. Okay. So you see right here, if I draw a line from this high to this high, this is a line that's pretty much sloping downwards. Okay. If I was to compare the price activity during that time, let's go ahead and draw another line here. Here was the peak and here was the peak. Okay. And you'll notice these two lines, if we compare, while this one is a little bit more steeper in its downward decline, this one is also a little bit steeper in its downward decline. In other words, they're convergent with each other. This is a bit of a pullback, but there's not a divergence. There's not the most powerful signal in all of technical analysis here. Okay. We would have like a bullish divergence here if prices made a new high. So if our line was looking like this and our MACD was looking like this, that would be one of the most powerful bearish signals in the marketplace. This is a little bit more subjective to look at, but we're just comparing whether this line is sloping up versus this line is sloping down. So as long as you understand the rules, it's still very objective, right? In this particular case, we didn't have that bearish divergence, okay? Although the MACD is losing significant strength. These peaks are getting a lot lower, and that's indicative of the fact that we've been going very shallow for a while, okay? But we don't have a more bearish divergence. If we did, right here where it says there have been no divergence signals within the last 5 days, it would say there's been a bullish divergence or there's been a bearish divergence in the last 5 days. So that's kind of an overview of the MACD. Again, just a quick recap. MACD, the first way you can use that is in conjunction with a signal line. When we cross down below its signal line, we're going to give you a buy signal because the MACD moves into a bullish zone. Okay, when it comes down into that bearish zone, we'll give you a sell signal, and you can see the ribbon on the chart. You can also see where the arrows come in on the chart. Okay, the second way is to look for whether it's overbought or oversold, and the third thing is divergence. Are we losing strength in MACD while we're gaining strength in price? That's a bearish sign. And one of the most powerful signals, according to somebody that I respect, Dr. Alexander Elder. So, to sum up, though, like that's really kind of how you would use MACD in your trading. Maybe it was useful for you. Maybe you've been doing this for a while and you know what it is. But one of the things I love about MACD is now that I've explained it to you, you should be able to see the buy signals and the sell signals for yourself with or without the use of MetaStock. It's very, very objective. And again, what we're looking at to make determinations when we use technical analysis is not what we think the result of the coronavirus, maybe the Delta variant or the alpha or the beta or whatever it is. We're not looking at kind of that. We're looking at what the market's saying is happening. We're looking at the trend of the stock. And by using technical analysis, we take a lot of the guesswork out. It's not right 100% of the time. Even in this example that I just put on the Dow's gone up a little bit, and there's a sell signal on the Dow. So it might continue to go down, or we might get a buy signal. But right now, this signal didn't work very well. The point is that it's objective. Okay. And one of the questions I'd get a lot from traders, and remember, I spent a good decade working directly with traders. I still talk to a lot of traders every day. But one of the mistakes that I would say that I would make as a new sales rep here, if I can remember 25 years ago, is I would start to talk about all the things that are included with MetaStock. You know, there's 9 different charting styles. There's over a couple hundred indicators in there. There's 40 of these experts. We just covered the MACD one. There's the candlestick one there's an RSI one, Tuna. It's very, very easy to kind of talk about all the features that are included in MetaStock. And I do think that's important. One of the things I love most about MetaStock is the more you learn how to trade, the more MetaStock grows with you as a trader. It's not a program, and I've seen a lot of them over the years that they sell you for $3,000 and it does one thing, and that thing doesn't work very well and you quickly grow out of it. With MetaStock, I think the more you kind of learn about technical analysis, it only grows better with you. But when we would talk to a lot of new traders, it's very, very easy to get a little bit overwhelmed in terms of, well, do I have to learn about 300 indicators is a question that I'd get a lot. And because a lot of these are methods that are, based on trend and give you very clear buy and sell signals, we have a very, very easy way to actually kind of go in and say, well, does MACD work well? Or would I be better trading a turtle trading system? Maybe the fractal systems is better. Maybe you have an idea that you want to test of your own. But the thing is we've spent now 34 minutes talking about MACD. MACD may not even work that well on Dow Industrial Average, or it might not work on the stocks that you want to trade. How do we know before we spend 35 minutes learning about an indicator what works in the marketplace? And since this is all objective, we've actually put together a tool in MetaStock that we call the tester, or the system tester. We call it the enhanced system tester. We used to call it system tester, and then we enhanced it. So now we call it the enhanced system tester. But it allows us to go in and figure out exactly how well this works and how it compares to other indicators. And I'm going to show you how that works. And if you have stocks that you particularly want me to throw into this back test that we're going to do, now would be the time to type in some stocks. We're happy to I'd be happy to look at whatever you want. So let's go ahead and kind of open up what we call the power console in MetaStock. It's this P button right here. And right here, it's going to list the tools that we have available. So charts. That's what we've been playing with all day. There's a quote list in MetaStock, so you can kind of put together lists of stocks that you want to follow. I've got a list. This isn't my version of MetaStock. This is the webinar version of MetaStock, but I have a list of my portfolio that I can go in and look at very easily. The scanner will come back to you. It's awesome. I use the scanner almost every single day the market is open. The system tester, that's where we're going next. Forecaster is a patented methodology of looking into the future. We won't talk about it today, but it's there. And there's some videos on youtube.com/metastock on how it works. And then there's an options viewer. So let's go ahead and click on the system tester for now. And what I'm going to do is, I don't see any tickers coming in. There we go. MetaStock, thank you. There we go. TRMP. That's an interesting one. Okay, so let's start up a system test. What I want to do as part of this is I want to go in and say, well, how does the MACD work? What stocks does it work on? And is it the best indicator I should learn about? If you're new to the market, you want to probably focus your learning. I couldn't tell you how 300 different indicators are calculated and used and read in MetaStock, but I can tell you how well they work before we even spend any time in them. So I've made a list in MetaStock of the 94 included systems or methodologies that are in here. We're just going to do, actually, no, I didn't make a list. I thought I had a list in here. Right now, there's about 27 systems that are in a list. We'll do that one. And then I'll select a few other ones. So you notice we have a favorites list here. And then I want to just select some of the other ones that are nowhere built in that don't use optimization. We can optimize MetaStock. You'll notice right here. And that just involves a lot of back testing that takes a little bit more time. And so that's why I'm purposely skipping it. I do want to make sure I include my MACD system just so we know how it compares. We'll do a point and figure system. And I'm not going to spend too much time selecting every one of these. Turtle Trader is already selected. We'll go ahead and just make sure we test the Turtle Trader system too. Point is I can take any of these systems. I can see how well this works on the instruments that I'm interested in. So let's go ahead and kind of add some of the stocks you're interested in. We've got DIA is the stock I started with. We'll go ahead and do XLNX.O, TRMB.O. We will do TSLA, AAPL, and what's another one that a lot of people, well, we'll leave it at that. Okay. What I'm going to do, just to kind of recap, is I'm going to go in and we're going to test the trading methodologies to see how well they work. Okay. We're going to take both long trades and short trades, so we're going to do both. And just to kind of make things fast, because I'm going to test all of these instruments, 1, 2, 3, 4, 5 against 27, so about 130 tests, which isn't a huge back test. You can do thousands of stocks if you want to. But I'm going to go back about 250 trading days, which is about 1 year. in terms of market cycle. In terms of trade options, let's go ahead and click on that. We won't worry about how this is reported. I'm going to go to the next side. We're going to start, and there's a number of different ways we can kind of simulate or this hypothetical back test. But what I'm going to do is I'm going to start with 10,000 US dollars, okay, because we're trading US stocks. And in terms of number of units, I could say, well, trade 75 shares at a time if I wanted to. I could say trade based on a transaction cost of like $750 or whatever you wanted to do. Or I could say trade on based on a percent of available equity. I'm just going to leave that as, let's go ahead and make it 50% of our equity, okay? Which isn't how I actually trade. Usually take a much smaller position. I like to have a lot of small positions personally. But what I want to do is I want to measure the effectiveness of the system. So every time we trade, we're going to trade half of the available equity we have, which in the case of this, we're going to have $10,000. It's going to trade half of that $10,000. So your first trade will be $5,000. As we grow the account, if we grow it up to $20,000, you'd be trading $10,000. It's going to allow us to leverage in the gains that we have, and it's going to always trade 50% of like our hypothetical account. Okay, let me know if that's unclear. Okay, in terms of broker, since I'm just trading, I'm going to say I don't pay commissions anymore, so I'll leave 0 as the numbers. If you are paying commissions, you can put in commission values here. In terms of trading market execution, what we're going to do is we're going to leave it at what we call realistic market prices. Now, what that means is if we look at the MACD example, here we would have got the sell signal, right? But depending on kind of how the MACD fluctuated during the day, that signal might have been there early, might have been on the previous bar and then went away because the MACD maybe rebounded a little bit. So this MACD signal, as long as a bar is open, it could be put on a chart and taken away. It's not really officially there permanently until the end of the market bar. Okay. So in other words, if you have this big rally down, it gives you a sell signal, but then people get back from lunch and it goes way back up, that sell signal wouldn't have existed because the MACD is based on the close. Right? So that's why that means here. And so to make it as realistic as possible, if we use realistic market prices, it'll wait until this bar closes and it'll buy on the open of the following bar. Okay. Now you can change that if you want. You could say, well, I'm going to check the market, and this is a little bit more accurate to what I do or what I try to do, as long as I don't get distracted. But I usually just try and check the market about 15 minutes before it closes and see what kind of exits I need to take. And so if that's the way you are actually going to trade it, that's the way you should test it. So you could go in here and say, well, I'm going to trade based on buying at the close, selling at the close, shorting at the close, and you can do that as well. I'm going to leave it at realistic market prices though. Okay, so I'm going to go ahead and click on OK. I'm going to go ahead and start this as a system test. And down here, it's going to say, actually, we're running about 660 tests. And you'll notice it's already 150 done. But you'll notice right here, we've done, right now it's doing a moving average crossover. There's an optimized system test. That's why it's a little bit more than my math. I actually did have an optimized variable in there. But so it's running an optimized variable now. But now it's testing a point and figure. So what it's going through is it's going through and evaluating every single trade on those 6 instruments that we provided and telling us whether it worked over the last year, if it didn't work, how well it worked, what our drawdowns look like, et cetera, et cetera, et cetera. Now, I usually try and limit it to like 5 or 10 stocks that were provided by you guys, because if I test the entire market, it can take a while. If I did like all of the 45,000 stocks, it would probably take well, I haven't done that for a while. I haven't tested all the optionables for a while, but last time I did, it took a good 45 minutes. Probably be a little faster on the SSDs and the new technology, but it's hard to fit a 45-minute back test into like a little system tester demo that lasts an hour long. So, but we'll go ahead and let this complete, and I'll kind of show you what it looks like. It is taking a little bit longer because of the pattern system with optimization, but that's okay. I'm going to take a little drink of my coffee. And it's still testing those point and figure system testers. I do think it was to the bottom of those, so I don't think it has much left to test. I could cancel it and look at the results, but I'm just stalling a little bit to see. Well, let's look for questions. No questions. Quiet group today. Let me go ahead and click on cancel here. And let's just look at the report we just ran, okay? is this the one that we just ran? 712. You'll notice that all of the results are here. And okay, canceled. 98. Why is okay? So that is the one I ran today. Okay, had 5 results. Let's go ahead and take a look at them. Let's go ahead and click on view. You see it's canceled, but I can look at the results up till that point. Okay. Now, in terms of the systems that I tested, since I tested multiple systems, the first thing that we'll be looking at is the systems and how they worked on average. So this is average performance against those 5 stocks over the last year. Okay. Obviously, green bars are going to mean that overall they're profitable, and red bars means they didn't work at all last year. Okay. And that's to be expected. I'm going to sort them by average profit because, again, actually, what I want to see is if we're kind of actually, let's do it based on average percent gain. What I want to see is I want to basically focus on what works. In other words, if there's 300 different indicators in there, I want to focus on the ones that actually make sense. I want to learn about the ones that are actually going to help me make money in the market. Okay. So our best performing system over the last year was the pattern trading system. Okay. Our second most popular system was the stochastic RSI. The one after that was the Shande forecast oscillator, and you can kind of see that it moves down in performance from there. Okay, I'd say roughly just kind of taking a look at this, I'm making some broad assertions. Approximately half of our systems were profitable over those 4 stocks, and half of them didn't work. Okay, and as a trader, I want to focus on what works. So the systems that I'd be interested in are stochastic RSI. Somebody was asking about RSI earlier. Tuna, we'll talk about stochastic RSI instead. The most profitable, though, was our pattern trading system. Over the last year, it traded about 27 times. If we look at our average trade profit versus our average loss, on average, per the securities that you've tested, 17.4 of them were winners and 9.8% were losers. So out of the 27 trades, that's how they broke into winners and losers on average. On average, our average profit versus our average loss was 1.2. Okay, so for every dollar we lost, we gained about $1.20. Okay, and our profit number of profitable trades to losing trades was pretty good too, 17 to 9. Okay, our best profit was $35, and this system never lost money last year on those 5 stocks. Okay, the next best performing system is the the stochastic RSI, which was developed by Stanley Cruel and Tushar Chandley, and it made about 15%. Okay, it had about $1,200 average net profit per security. The best was 440, but worst was 156. The thing that I like about this is it actually was a little bit less frequent. Okay, instead of trading 27 times per instrument, which is about 2 or 3 trades a month, right? 24 would be 2 trades a month. So 2 to 3 trades a month is a lot of trading for any single stock. This one did 16, which was less than 1 per month. On average, it still had a really good win-loss ratio, 11.4 to 5.4. Its profits versus losses was actually kind of low, 91. But I like this system a little bit better. And this one I actually like too. The fractal trading system only traded 5 times. Okay. Now, I do call this kind of finding the right strategy for you because there's a lot of different ways you can look at the market. Again, there's 300 indicators in here, right? And for me, like I have limited time during the day where I can look at a market and, spend the day here in the webinar room doing webinars, which I enjoy, working, managing the sales floor and kind of contacting and setting up all the summits that we do. When it comes down to it, I maybe spend 10 or 15 minutes right before the close actually trading. So for me, something that's like the fractal trading system that trades 5 times a year per instrument is actually fairly selective. And I would actually prefer that over something that's going to be way more active. So there's other things that we want to look at, and we can drill into the reports and actually look at them. But I think what we're going to do is kind of a sweet spot in the middle is the Stoch RSI, which was developed by Tushar Chandley and Stanley Kroll. And that's actually in our expert advisor, so you don't even need to know that. But it's based on based on the fact that it's 16 and it doesn't have a huge loss. It's trading a little bit less, making a little bit less money, but it's probably a little bit more efficient. Just in the fact that you're not working so hard to get that 4% less. Okay, so let's go ahead and click on the report here. If I click on view, it's going to list all of those different shares. So Z-Link's Ordinary actually came in pretty high. I'm going to sort this again by net profit. If I had tested like all of the optional stocks, that's this test you can do in MetaStock very, very easily, we'd have actually 3,000 bars here. So we would, out of the 5 stocks that we actually did test, I did have one of, I actually put in the symbol for Tesla wrong, my mistake. But out of the tests that we did, I do have a pretty good idea that out of the 4 that were tested, these 3 worked, this one didn't, okay? If I had tested all of the optionables, I'd have a really good idea of how this worked over a broad range of stocks and not just 4, right? Just looking here. I would say, though, based on 3 out of 4, that's not bad. And if I look at Z-Link's Ordinary, if I would have traded just that last year, I would have made 23 trades, and I would have had a 44% gain with a batting average of 18 winners and 5 losers. So not only does this help me find the best system to trade, it also helps me match that system with the best stocks. And so I can kind of get in a good idea of how that works, okay? There's all kinds of stuff that we kind of can review here if I would take a look at the view report here. I'm looking at the time and, we can go a little bit long. But I'm not going to go too long. An hour is not enough to listen to me, I think. In any case, so if we look at the report, our profit was 44%. If we would have just bought and held, we would have been up 26%. So by trading it, instead of being up 26%, we're up 44%, meaning that we were 66% better off than buy and hold. Sometimes that's the other way around. Sometimes stocks go straight up for a whole year and your buy and hold is always going to look good and maybe be better. So I don't put a lot into buy and hold. A lot of times people say, well, I could have just bought Apple. Like that was the big one. Like, Apple went up for decades in a row, right? And I'd be doing better than just trading it. But you don't have a strategy in place. And at some point, Apple stopped going up month after month after month. Not to say that it's not a good stock. I love Apple as a stock. But it's probably better to trade it now than hold on to it. So, and by trading, we have a plan. We know when we're going to get in and out. In terms of our profitable trades, 18 and 10, 18 total profitable trades, 10 were long, 8 were short. In terms of our unprofitable trades, 1 was long and 4 were short. Okay. What I like here is like it'll give you the average. So on average, when I traded, I made about $343 trading Z-Links. On average, I actually lost more money than I gained, which I don't like to see it that way, but it was only $353. And that's offset, of course, by the fact that we had way more winners than losers. Okay. Right here, we have a buy and hold index. We talked about that a little bit. The other indexes that we'll talk about is profit loss. That was 71%. That goes from minus 100 to plus 100. 71 is really good. Risk reward index was actually 100%. Okay. Now, if you're interested in some of the numbers that I'm not talking about, the help system in MetaStock is actually really, really good. I could go ahead and click on help, and it'll list all of these profit numbers and what they mean and that kind of stuff. Okay. Sean, thank you for your question. What is an additional indicator to use with the MACD? Is relative strength good to pair with the MACD? You can actually test that if you want to with MetaStock, Sean. Typically, I would say with MACD, one of the things that now this is personal, and I can put my disclaimer again. One of the things that I like to use, I don't use MACD, but one of the things that I really like to look at is the slope and the direction the 20-period simple moving average. Trade in the direction that that's pointing, and you pair that with it would be a recommendation I would have. It's one of the things that I've used for years. And it's one of the things, it's funny, but a lot of people look at that 20-period simple and they're like, yeah, it's a great indicator. Again, I'm not recommending you do it, but I recommend you add it to a chart and start paying attention to if that's pointing up or down when you're buying and seeing like maybe if only buying when it starts to point up is helpful. So there you go. But thanks for the question. In terms of pairing MACD with a certain indicator, I can talk about the ones that are popular, like stochastics is a really good one that kind of is a different one. There was a guy that we used to work with by the name of John that said you should use like a volume indicator, a volatility indicator, a trend, and a momentum, and you should use 5 different indicators, and he wrote an add-on that helps with that. Personally, though, add that 20-day simple moving average to a chart, start paying attention to the slope of it, and see if that's helpful for you. That's one of the things I look at all the time. Okay. I had to take a moment to think about where we're at. So in summary, right here, we're on the summary page. The stochastic RSI worked well on those 4 stocks. We're also at XL and X.O, and it worked very well on that. The one thing I'd like to look at, there's tabs up here that you can look at every order that was placed, the positions. One of the things that I always look at is equity, okay? Because if I'm actually trading this, I want to know, well, how bumpy is the ride, right? We made 40-something%. What was our percent? 44% in the last year. But how did that look as our equity? Did we go down to minus 40% before we were up 40%? And this is a good way for us to kind of ascertain how well of a roller coaster ride this is. And with stochastic RSI, there's a lot of fluctuation. But for the most part, this isn't an equity curve that I'd be afraid of. In other words, in general, it rises. I'd much rather see a 45-degree angle, which you never see because no system is perfect. But this is one that I wouldn't mind learning more about, the stochastic RSI, or the performance systems stochastic RSI. And so if this is the first time I've ever heard about the stochastic RSI, how am I going to learn about it? Let's go ahead and open up the chart of Z-links. I can actually plot this on a chart, and I can see exactly where my buy and sell signals are when I did that. Let me go ahead and close this down. Okay, so here you see all of the buy and sells, and this is that same equity line we were just looking at. If I wanted to learn more about this particular methodology, there's going to be a matching expert advisor. So I just come in here. I can go to PS stochastic RSI. Okay, we'll go ahead and click on attach. We'll go ahead and click on close. I'm going to delete the system tester generated symbols. So let's go ahead and take those out. Okay, so that should be a little bit easier to look at. But now you can see every time it would have recommended you buy, every time you would have recommended you sell. And you can see that there is some chop here. It doesn't always get it right, but if we would have taken every signal for the last 4 years, we would have actually been up 40%. Okay. If I want to learn more about this, and I can go to the same commentary we were looking at before, we could look at a buy signal. I could actually say, if trading short positions, exit all short positions today with a market on close order or at the market price on tomorrow's open. If you're trading long positions, you should enter long today. Okay, so if you're in a short, go ahead and get out of it, get in a long trade. Then it tells us a little bit about the stochastic RSI. Tushar Chandri and Stanley Kroll developed the stochastic RSI. One of the problems with using the RSI as an overbought, oversold indicator is that due to the built-in smoothing, it may be a long time before an extreme is ever reached. This forces it to miss out on many significant. So by applying a stochastic process to the RSI, it makes it so that an extreme, it will have to be reached within a limited amount of time. So what Stanley Kroll and Tushar Chandri did is they were like, well, okay, here's a failure of the RSI, but if we combine the stochastic to it, we can get rid of that failure. So it actually applies a stochastic first, and then it applies an RSI to that. I might have that backwards, but I could read it again, but that's kind of what it's doing in general. If this is a system that I like, I could actually start using stochastic RSI with my trading. If I'm looking at the chart today, specifically at the very end of the bar, like right now, if I was looking at this today, it said 15 days ago I should have gone short. Well, that's not something that I'd probably go short on today. It's a little long in the tooth. But if I wanted to, one of the other things I could do is I could scan for an entry using our scanner. So the final part that I'm going to show you in MetaStock, the final power tool is actually how to do that. If I find a system I really like, whether it's MACD or Turtle, and really understand and I want to start trading with it, I can come to our Explorer I can go in and I'm going to find a matching PS system. So I could find that stochastic RSI. I just had to remember what the name is. So let's turn off MACD and I'll find that stochastic RSI. And you'll notice there's a ton of systems in here. That's why it's so nice that we can test them. You know, it really allows us to kind of shortcut that educational process. But if I wanted to find a stochastic RSI signal today, let's just run it real quick against the S&P 500. Okay, we'll go ahead and start a scan like that. This is gonna, you'll notice how fast that's going. It's gonna, I'm gonna be able to tell just real quickly which stocks have an opportunity for me. And so when I say literally that I can go in and trade, do all my trading within about 14 minutes, this is what I'm doing. I'm running a scan. I want to ignore all the stuff in the market. There's 4,500 stocks, and probably out of those 4,500 stocks, there's a good 25 that might have an opportunity that I'll be interested in today. This allows me to focus on those. So in this case, I'm ignoring 466 stocks that didn't have an opportunity. I can just focus on the 39 that actually give us a signal and determine which of those that I like. I love the scanner in MetaStock. I use it every time I trade, and I try to trade every day, but sometimes, and I don't know if you're like this, but sometimes I try to do all that trading between 150 and 2 or 145 and 2, which is mountain time. Sometimes I look down, I'm like, it's 2:15. I guess I have to trade tomorrow. So for me, for a lot of our customers, the ability to go through a list real quick and just focus on what works. I'd never have a chance to even look at all the S&P 500 stocks, let alone all the optionable 4,500 lists. This allows me to just focus on what works. So you're welcome, Sean. Do try that. Try that 20-day simple moving average trick. Okay, so if you're new to MetaStock, hopefully that gave you a pretty good idea of how it works. Getting a little hot because we have the light on in here today. But in terms of kind of the pricing, again, it's been rated #1 in its price category 27 years in a row. We have 2 versions of MetaStock. We have the MetaStock Real-Time. One of the things that's kind of cool is we package MetaStock Real-Time with a software that we also call MetaStock Zenith, which I haven't even opened today. But Zenith is cool in its own right. Just to give you some kind of a broad picture of what Zenith does, Zenith is a product that was put together by Thomson Reuters. They spent over $1 billion on it. Now they're Refinitiv. It's a software service that's powered by over 200 exchanges globally, over 200,000 instruments globally. If you know anything about Thomson Reuters or Reuters, they're famous for their news. They have 2,000 different reporters in over 200 different news bureaus around the country. It's actually a data service that is used by your hedge funds and your mutual funds, and they pay a premium for it. So it's a very, very cool service. I didn't talk about it at all, but it offers a lot of stuff, and we package that in with MetaStock Real-Time for just $250 a month. So you can get that. You can also get any of the markets you're actually interested in, and that price starts, cut the hiccups, all of a sudden at $250 per month. Okay. The other option that we have is MetaStock DC. DC stands for end of day or daily charts, which just means end of day, which means it doesn't update during the market. It just updates after the market is closed. And that might be a package that you'd be interested in if you just want to run scans, maybe work during the day, and you want to be able to run scans at night and just really find out what works. The nice thing about DC is it's only $69 a month here in Americas, or $59 in other regions. We cover Asia as well as Australia, so there. But it's $69 if you're here in America and $59 if you're somewhere else. That includes MetaStock. It includes all the data that you need. There's nothing else that you need to get. And what I'm going to do is, I'm fairly confident that you'll like MetaStock. Or what we're going to do is we're going to set up what we call an extended trial for you today. If you buy a month of MetaStock, we're going to give you the second and the third month of MetaStock for free. And in addition to that, you're going to get MetaStock 17. You're going to get data for the region of your choice. Here's the choices they're going to give you: North America, Europe, North and South America, I should say, anything that's in the Americas. You could get Europe, Middle East and Africa. And you could also get Asia Pacific. So those are the 3 choices that you have for your data region. It's going to include all of the data that you need. If you're doing real time, there might be some exchanges. The exchanges charge fees to get real time data from them if you don't pay for them. Like in the stocks are like $350 for New York, and I think it's like $350 for NASDAQ and $350 for Amex. So it's not very expensive for stocks, but futures can be pricey. But the exchange all charge their own fees, so you'll end up paying some fees that we'll charge you for. You pay MetaStock for them, but we just revert those fees to the exchanges so that we can provide you that real-time data. We don't actually make any money on them. So in addition to that, though, you'll get white glove installation support. Basically, what somebody will do is if they'll help you, they'll call you. They'll have up to a 2-hour block of time that's actually dedicated to just working with you. It may not be that the appointment doesn't last necessarily 2 hours, but they will spend time. They'll make sure everything's installed, operating correctly. They'll even walk you through some of the tools that we talked about today, like the scanner, the tester, the explorer, anything that you really want to see, they'll kind of walk you through. And we call that the white glove installation support. It just shows you how everything works. And that's a one-on-one appointment. We started doing it a couple of years ago, and it's been tremendously successful. Because again, we feel that if you understand how MetaStock helps, that it's going to pay for itself. And so the risk for you for trying this is for, like, let's say you do the end of day option, $59 a month is what you're going to pay. So you're going to get 3 months for that. That's going to be like just under $20 a month. Okay. And for that, if it's not helpful for you, if it doesn't help you find better trades, if it doesn't help you take your trading to the next level, you're just going to cancel your account. We want to make sure that it's helpful for you so that you keep subscribing to us. So that's why we do the white glove installation support. We've been doing it for a number of years, and our customers absolutely love it. Turns out if you understand how to use tools, you can put them to work. We'll also give you an at-home study course, at-home online. It's really a more appropriate term. It's called Unleash the Power of MetaStock, and it goes through like how the system tester works, how the scanner works, how the expert advisor works, how the charting works, how some of our favorite systems in MetaStock works. It's a very, very comprehensive online video course, as well as a workbook that you can kind of go through in a PDF format as well, and that's free too. So to sum up, if you want to do real time for 3 months, it'll cost you $250. To do 3 months of DC, it'll cost you $69. For that, you're going to try the highest rated #1 software that's been rated #1 for 27 years in a row. I wouldn't trade it without it. I think you should try it. You can do that at metastock.com/P220. You can give us a call at 800-882-3040. If you have any questions that I didn't cover, I notice in kind of my peripheral vision, there's some questions I'm going to talk about in just a second. But if you have any questions that you just want more information, or if you want to sign up through somebody that can help you get like the one-on-one established, our sales team is great. You can call them 800-882-3040, or you can chat online with them at metastock.com/sales-chat. Encourage you to try it. Your risk, even if you just try the end of day version, it's only $69. And if you're finding 1 or 2 better trades that you wouldn't have found otherwise, or just a little bit better with your trading, it definitely is going to be something that pays for itself. So there you go. Let's see. Marco says there are 2 choices: real RT, yes, or DC. So real time or DC. The big difference is with real time, prices stream into it and it updates during the day. It'll also allow you to look at daily or 30 or 60 or 5-minute or tick or multiple tick charts. Those are all included. DC is just daily or higher, and it updates after the market closes. So thank you for that question. And hopefully I was clear with that, or if not, hopefully that helped clear it up for you. Okay. Hans says, great webinar, thanks. Regarding the slope and direction of the 20 simple moving average, you mentioned that the indicator that gives slope and direction. So not what I'm saying, Hans, and without getting too much, well, actually, let's just show. If we're looking at Z-links, just do this to your chart, okay? And play with this. I mean, I wouldn't recommend you take it. You don't know me, but I would recommend that you start taking a look at the simple moving average, this 20 simple moving average. Is one of the things that I actually love to look at. And when you're taking buy signals, make sure that the direction of it, the slope of it is up. Okay, or maybe even just go back and look at the last maybe 10 trades that you looked at or that you took on. Take a look at them and apply this 20th period simple moving average, and notice if the stock was sloping up when you bought it or sloping down when you bought it, and maybe it's something that'll be helpful for you. It's just a 20 period simple moving average. It's a really easy filter to look at. It's something that actually Vince Vora talks about in his trading. We do a lot of webinars with him, but he's not the only one. Also, like, it comes up a lot, actually, in different YouTubes that we do. Let's see, was it Stuart McPhee? Oh, no, Colin Abrams was talking about the 20 period simple moving average. And I get a lot of comments that are like, yeah, that's really good. You should look at it. So I'm not saying that you should use it. I'm saying you should look at it. Go look at the last 20 trades that you said and say, okay, well, if I bought, was it sloping up? Would it have been better if I hadn't bought? And while it was until it slipped up, just take a look at that and see if you like it. Maybe you will. Okay. As for me, I hope that's helpful. If it wasn't, if that wasn't helpful, Hans, drop me an email. But that's just kind of what I look at with the slope and direction of that 20 SMA as a kind of a confirmation that I'm trading in the direction of the trend. So Hans says, got it, thanks. I recently upgraded. Thank you for upgrading to 17 and was offered a copy of this Unleash the Power. Is it available online? So yes, for you, Hans, all you need, thanks for using MetaStock, number one. Number two, if you go to metastock.com/mydownloads, it should be right there on your My Downloads page. If you can't find it, call us. We'll help you find it, and we'll make sure it's on your account if it's not. So otherwise, that's it for me. I will be back here in 5 hours to do a webinar with Steve Bigelow. If you have time, I'd recommend you come. Steve is way better of a presenter than I am. He does a great job. He's one of my favorites. But I've also learned a lot from Steve over the years. So that's in 5 hours, 6 p.m. Eastern time. MetaStock is going to put a link to the sign up for that webinar right now. If you haven't tried MetaStock before, 800-882-3040, give it a try. What's the worst that could happen is you could cancel your account. So give it a go. In terms of us, thanks for coming today. I hope you enjoyed this session, and I hope we see you tonight, I guess. Stay safe, stay healthy. See you tonight.